The energy industry has taken a real beating, and not just because of the global pandemic, but because of the price war between Saudi Arabia and Russia. While little progress has been made with each side continuing to increase their output, Trump actually had a call with Putin yesterday, but not much concrete solutions came out of it. But Putin did agree that oil prices are bad at where they are currently, as oil prices are on track to have the worst quarter ever, which shows you just how bad oil has been doing these past months. An analyst at Goldman Sachs actually projects global consumption to fall 26 million barrels this week, as well as some big companies in Texas actually looking to cut production and hoping that the Texas board will institute a 20% production cut just to help with prices overall. This doesn't seem like a good solution for the future, but might help out short term. Alberta kind of did the same thing a few years ago, um, but overall, they still had issues getting their product to market. Some interesting concerns that the leaders in the market are having is that this will have a dramatic impact on the US energy market going forward and won't recover once the pandemic ends and oil prices recover because many of these companies will be gone, as well as they just won't see much way to cover. And as you can see the quote here, the expects we are going to be importing 5 to 7 million barrels a day from foreign sources. So the U.S. has really turned around their production of oil and become an exporter in the previous years, but with the price of oil dropping, it could detriment that in the future. Imperial Oil is the next company to announce capital spending cuts for 2020 with a decrease in oil prices. So in total, they plan to cut capital spending by 30%, roughly 500 million Canadian dollars. In total, they plan to spend 1.1 billion to 1.2 billion for 2020, which is down from their previous forecast of 1.6 billion to 1.7 billion. This just continues to add to the reduction in capital spending in the industry, and going forward, it's hard to say how well it will recover. Not all news is bad in the oil industry today, as TC Energy has just announced that they've cleared the way to start construction for their Keystone XL Pipeline. This comes off the bat of the project being delayed substantially for years as they've continued to try and move this pipeline forward. In total, the Alberta government is contributing a lot to this project as they've agreed to invest 1.1 billion US dollars as equity in the project. They're also going to finance part of the debt, so they're in total having a 4.2 billion um, credit facility that's going to be backed, guaranteed by the Alberta government. TC is also investing 2.7 billion for the project and making a total investment of roughly $8 billion. While this does sound like kind of good news for the industry over in Alberta, I'm hard pressed to say whether or not this will continue to move forward smoothly, as this project has been in the works for a number of years and really hasn't made much progress. I find it hard to believe that it's going to start now, especially where oil prices are at. It feels like a lot of production will be cut in Alberta if oil prices continue to stay at this level, and this pipeline might get scrapped in the future if oil prices don't recover, as well as other issues with the courts and protests. Unfortunately, the good news ends there, and I've got some more bad news, as Iraq is going to increase their oil production by 200,000 barrels a day. In total, they plan to reach 4.8 million barrel a day in production, and they plan to export roughly 3.6 million barrels a day in April. This continues to increase the price war with Iraq really getting involved. It's hard to say if other countries in that region will also continue to increase their production, which shows you that the price war isn't ending and could continue to get worse. We could possibly see oil dropping stably below that $20 level, maybe even possibly reaching that $15 level, which wouldn't be good for anyone going forward. Yesterday, Moody's downgraded South Africa bonds to a junk rating, meaning that all their ratings are now in that junk bond area. This was expected by many as they continue to expect further downgrades over the coming years, but this will have a significant impact on South America as their currency, the rand, is actually down 22% already this year. A lot of this has already been priced into the markets, as many have expected this downgrading to happen. It's kind of interesting to think about what took so long for these rating agencies to happen, to change their ratings, and it kind of shows that often they can be behind the ball on things, and even the market has priced it in before they have made their decisions. An area, though, that this will affect South Africa is who can actually buy their bonds, as many indexes, ETFs, and funds have limitations on the ratings that they can buy, and they'll be excluded from certain index and ETFs, and will actually have to be sold from them now, which could have a bad impact on their markets. Although their central bank there did say that they're going to start quantitative easing with purchasing of their bonds. Some more notable companies that have looked into this downgrade. So Barclays have are assuming that this will reduce 6 billion in that market. So 6 billion uh, worth of bonds will be forced to sell. Citigroup estimates that the total will be 6.6 billion, but they also expect that this most of it's already been priced into the markets. Credit Agricole is expecting that between 9 and 13 billion to outflow from that market. They don't expect much impact on the rand, though, with the quantitative easing that's happening. Deutsche Bank is also seen affected this, while they were actually advising their clients to potentially purchase this as the yields continue to rise. They've gone back on that as they expect that the rand could actually depreciate 10 to 20% more. Intellidex expects about 3 billion of income of bonds to flow out of that market, as well as another 2 billion that will exit as well, making a total of about 5 billion leaving. Morgan Stanley expects roughly 2 to 4 billion of capital to exit that market. They expect the rand will continue to weaken, but not to the level, not significantly lower as they are already down about 22%. And lastly, Standard Charter expects that between 4 billion and 10 billion of an outflow will happen. In total, it's not a good news for South Africa, as many of these companies also expect that they could possibly have a downgrade in rating coming in the future.